I think looking at the competitive landscape the last years, it's getting broader. More and more non-financial services are entering the market, using solutions like those of our colleagues here. The biggest change is really different players entering the market and also allowing customers to get the loans at different places than at the typical bank. So people don't go to the bank or the lending provider comes to the place of where the client is, whether that's in a physical setting, but more and more in an online setting. Combined with tickets getting smaller, so clients tend to take more smaller tickets, especially in the commercial banking space. Smaller tickets at a higher volume is almost a sort of a recurring model for them to work along with the cash.
Yeah, and it also makes it easier, right? Because if you don't have like already a good credit rate or whatever, you can still lend quite some money. And it's really fast. So if you want to have something now, which is the younger generation, if I might say, really eager to do, then that is a big market.
Yeah, and I think that the increased digitization that the pandemic sort of accelerated, that has also sort of changed the customer expectations from these lending solutions. They're not just looking for transactions, but they're looking for personalization, they're looking for speed, they're looking for a very seamless experience.
And I think we see that in both, right? Both in the private setting, so the personal individuals, but also the smaller SMEs. Their behavior is so much diverging or converging actually, more and more the same. And also the way how they get it is completely the same. And that's quite interesting.
Yeah, and what you see used to be separated, right? And now they want their personal banking and their business banking combined and see it in one screen, if you will, or whatever they're looking at, basically.
Yeah, and I think speaking to the point of the traditional lenders then, the pressure on them is also really high because, like you said already, that there are so many non-financial institutions also stepping into the game, that speed of innovation is becoming key also for the traditional lenders. What are they going to do to make sure that they can keep up with their offerings and products in the market?
Yeah, and I think that is the big challenge, right? The digitalization, because that's done partially, but not fully. And that's a big challenge with all the legacy systems that they have and all the integrations that are quite complex. The data is there, the knowledge is there, but connecting all of it together in a nice and agile way, that's one of the big problems they have, versus more of the greenfield players or the non-FI players, if you will. What I see as the next big trend, we already mentioned it a little bit, that the biggest one is that lending is going to be totally different. I mean, there's multiple ways to do your lending, and you can think about, for example, well, Bol.com is now doing it, Amazon is doing it. You lend while you do your retailing, and you don't lend first and then purchase something, right? So that's one of the big differences, I assume. And also what you see is that people, especially in the business area or with more money, they want to have one view of everything, no matter where they have their money, no matter where they did their lending or whatever. And that's going to be the next thing.
I think to add to that, right, you also mentioned it earlier. I mean, in the end, the availability of data and how real-time that information is and how real-time that data is available also makes the choice and the credit scoring much easier and much faster than in the past, right? I mean, for personal individuals, it's already easy. You just look at the bank accounts and scan them. But even also for businesses, with all the online bookkeeping packages available, combined with the transaction data, the credit scoring isn't dependent on the delayed information that used to be at the credit scoring bureaus. I think that will change a lot as well to make it even smoother.
Yeah, and that too, when you get a head start, right? If you have a business, you can now, on the invoicing you still have to get, you can already start lending. And that makes it easier to run your business in the future.
Yeah, I want to, totally sort of join there in saying that the embedded finance or embedded lending is going to be a thing that everybody needs to deal with. And you had earlier said that, there is already the knowledge, there is already data, but centralizing that data and also hiring the right talent to work with that approach that you need to reduce the cost to serve the market, that is something that I think is going to be absolutely a trend for all players in the market.
Yeah, and what you see, especially with the big banks, if you will, is that the cost to serve are very high due to the silos, right? And that's where they have a bit of a disadvantage right now, and that's where the digitalization comes in. But yeah, you have to digitalize, but yet get access to all the information and have it in one place. I think that's going to be something that's going to be really important in the next couple of years.
Yeah.
And really closing that end-to-end journey, right? I mean, I think especially in the Netherlands, we've seen a couple of the big banks, whether it's New10 from ABN AMRO or Rabobank with Thunder, they focused on the origination journey. I think it's now about taking the full step and doing the full lending process, including servicing, to also make sure that you can change a loan, make it bigger, make it smaller, and have that flexibility. And I think if they take that step as well, I think they'll really play the key role that they've always had in the past.
And I believe that, you know, if we can get the players to understand that data-driven approaches are going to drive innovation in terms of what new products you can put out on the market. I mean, buy now, pay later is, you know, one of the things, but there might be more innovation in that space as the customer needs are evolving, and that centralized data is going to play a key role there.
Yeah, and I even think predictability, right? Because if you can predict better, you use your data better, you can proactively advise your customers, whether being businesses or just consumers. And that will increase the sales, I think. And also your productivity, because you know your cycle gets shorter and shorter. So I think that is something that would be on top of my list if I were a bank.
So to talk about how traditional lenders can compete in this space, I think I will give a very simplified, you know, answer to that. And of course, there are challenges to every approach. You know, there are customers of ours that we see are doing greenfield implementations, that they start with a new core, with completely a new proposition for a part of their business, and then, you know, drive that modernization to the rest of the organization. We have customers that are doing speedboats that, you know, leverage innovation in a product or a particular segment and use that to compete in this market, which is changing. Or you also have customers, more and more customers that are acknowledging that, you know, you probably need to take that difficult step to transform your core banking. So we have examples, successful examples from all of these different strategies, and like I said, they all have challenges in there as well.
Yeah, and I think it really also fits the risk appetite of a client and where they are in their maturity. For some it will be indeed a bigger experiment like a speedboat to try it out, and some have already had those lessons and want to scale it. And I think there's a multitude of options available now and a multitude of scenarios. I think the main thing is start to move, because I think in the end the market is moving ahead and the competitors are moving in from different markets.
And that is the big challenge, right? Because a big bang is almost impossible. It takes years, and you don't have years, and you need successes now, and you need to improve now. So, and especially on the engagement level, right? Every bank has on top of their list, we want to be banking around the customer. And that's a real hard thing to do if your lending is here and your lending for business is somewhere else. And you know, it's really hard to make the customer at ease and do it fast, right? You want to do it, you want to do or file for a lending in like 5 minutes. I mean, that's what's in my head. But if I actually do it at a bigger bank, it doesn't take me 5 minutes, it takes me days if I'm lucky, right? So yeah, I think that is a big challenge for them.
Yeah, and I think the biggest challenge is there. It's more about the time to yes than the time to cash. I think you want, as a private individual looking for a house, or whether you're a business looking to do that investment to grow, you want to have clarity if you're going to get it yes or no. In the end, if the cash comes later because you need to provide some additional information, that is typically fine.
Yeah.
And setting up those kind of interactions and doing that ruthlessly, I think will be the stuff that makes the difference.
Yeah, and that's the engaging part, right? Yeah. I mean, loads of times the apps are beautiful. They're really beautiful. But at the back end, there's something coming out, an email, a form, and somebody takes it in their hands and goes to another system and does something, right? And that's where the big problem is, I guess.
Yeah, I think there was research done which said that 40% of the time is spent on manual processes, right?
Yeah.
And that is the advantage that you're looking to gain. How can you reduce that percentage of time in such a process?
Or make it at least efficient, right? I mean,
Yes.
we've all seen the banks where it's an endless flow of emails between an advisor and a client, and no, it's not the right document, I need something else. And at the end of the 17 weeks that they've been interacting, it's like, I'm not sure we're complete yet. And I think centralizing that, making sure that there's a good overview, will help in close the cases.
And is the slow movement also due to all the compliancy fear, if you will? If we make changes, something changes there, we might not be compliant anymore. So we're a bit reluctant, especially to combine things.
It's a fear, whereas actually if you look in practice and you read all the policies and you look at all the templates created by the departments, they're non-consistent, that it's in compliance by nature.
Yeah,
That's the interesting circle that's in those kinds of settings that I've seen too many times.
Yeah, totally agree.
The risks for banks to that if they don't stay up to date with this transformation that's happening in the lending space, I think that, you know, we said that earlier, all the neobanks and non-financial institutions that are faster, more adaptive, smarter, they are going to move in on the customer bases of the traditional players. And that is the risk that, you know, the banks are taking. One, they're, you know, likely not able to reduce their cost to serve the market, and they're going to lose out on those revenue streams, because if your customers go to another player which is faster and meeting their needs better, then, you know, the risk of churn is also going to be higher.
Yeah, and I think it's not just a risk, right? It's actually happening. If you look at the market share figures, whether it's mortgages or it's business loans, it's declining heavily. I think in the mortgages, it's a combination of other attractive players, but also the not interest-only loans anymore. So the portfolio is declining. And on the business side, I mean, there's so much competition now coming up that the market is declining, and the market share within that declining market is also declining. So it's not a risk, it's an issue that needs to be addressed.
It is, and what you also see is lending is taken out of big banks in different occasions, right? You have the new neobanks who do that specifically, but you also have the peer-to-peer lending. And that is also a big threat, because for people who really need to do it fast and don't want to put much effort in it or have not the best credit rate, they will choose other options. And it still is a big market. I think there's opportunity and there's risk. So the opportunity is what you see now, but then the big banks, if you will, need to be fast. The opportunity is they always need a bank for it, either way. If you're like Apple Pay or if you're Amazon, you need a bank, right? You're not a bank, you're not becoming a bank, you need it. So there's a big opportunity for banks. But there's also a lot of competition amongst each other, so you need to be fast. So I think that will be a big opportunity. The threat is that I think especially Generation Z will use the other way of lending, buy now, pay later, and you know, it's easier, it's faster. And everything, you know, it's all, we're not waiting for anything anymore. It's, if I want it now. So I think that's a big threat, because that's a big percentage of the market, or will be a big percentage of the market.
I am curious how the compliance is going to catch up with all this embedded lending revenue streams and these players, right? Because one of the major things that banks have is compliance and regulatory requirements that they need to fulfill. And I think that for the other players, that's the reason that, you know, they always need a bank, because you need to, you know, at the end of the day, follow the regulatory regime in the financial services space. So I think that that is also going to be interesting to watch how that's going to evolve.
Yeah, agree. And that too is a blessing and a curse, right? If you're a big bank, you already have it. Yeah. You're quite advanced with that. On the other hand, it slows down the innovations you are doing as well. On the other hand, for the neo players or the non-financial players, there is more risk, right? Maybe lawsuits in the future?
Which are actually already happening, right? I mean, a lot of them are under scrutiny at the moment, and I think that's where the chance is also for the larger financial institutions to leverage that and work together. I mean, it doesn't need to be an or game, it can also be an and game.
Yeah, totally agree.